Hey, good morning, everybody. As we close out this shortened week, we are going to talk about the small account challenge because that's what we want to do every morning. So rather than me talk, I'm going to hand it over to Love. I'm much better at this, and she'll tell you about what's going on with her small account, what she has planned, and then I'll do the same at the end of the show and we'll wrap it up and head into trading.
Okay. Well, good morning, everyone. So yeah, I'm gonna update you a little bit on my small account and how the specific challenge is happening. But you guys already know, right? I talk to you guys interday via the chat and Discord. There's nothing that I've done that you don't know about, right? Which means I haven't done anything to it. This week has been super choppy. It's been super risky, and that's hard for a small account. And so, yes, my small account is still holding that same IW input that it had from very in the beginning of the week. Any other trades that smaller trades I might have had, again, I alert you guys in real time on Discord, but I haven't taken much, right? One of the things that can be death to a small account is trying to over trade, trying to force a trade when there isn't one, right? And so this week there legitimately has been too much volatility, too much risk for a small account. Now, my main account, sure, I love risk, but I do not believe in over trading a small account or forcing it just because. And so for the majority of the week, it hasn't done anything. I haven't added more contracts. I haven't bought anything else. It's just sitting with that one IWM contract, right? And that's the one that I alerted you guys with on Discord. So
And when does that expire? Just out of curiosity.
what?
When did,
July 15th.
okay, like the institutions are doing, July 15th.
Yeah, yeah, and for the most, like, I posted that for them too as well. But
Mhm.
it again, unless you see or you have confirmation of a really strong trend, buying weeklies with a small account is really dangerous because we've noticed in the past couple weeks in this market, trends change, sometimes overnight, sometimes intraday, right? And what can happen is if you get on the wrong side of a trade, what's going to happen? You're going to get emotional about it and you're going to want to do one of two things: either add more, right? And or stay in the position too long, and when in fact you should probably exit out, regroup, and then wait for the right setup. That's exactly how you win with small accounts. You wait patiently for the right setup. One of the things that you don't want to do is end up with too many contracts and over leverage yourself. So for me, what do? Nothing. Absolutely nothing. Right? If I'm end up wrong about the IWM in the next 2 weeks or so, right? I'm sure I can find a good exit point at some point, but right now, I'm not willing to put more money into it. Right now, I'm not willing to add more things to it, right? So my small account is sitting exactly where it pretty much was on Tuesday. The contract's worth less, so it's obviously worth less. But um, I personally, uh, because you see my dog in the background, I personally don't feel the need to trade every day. So what I'll do is I'll just I wait for just the right setup, right? Instead of trying to force a trade, because let's say that our IWM contract had went up like 20%, right? Then all of a sudden it dropped down to 0% or negative 10, right? What are you going to do? You have a choice there. You can leave it, you can sell it, you can enter, or you can buy more, right? And for me, I'll leave it if I still have confirmation of the trend. Or if I don't have confirmation of the trend, and I'll sell it. And how do I find confirmation? Well, I'll look at, I personally use algorithms. I'll run some algorithms. I'll look for the option flow to see if there's still open options for similar to the one that I have. Um, I'll look at the charts, right? I'll look at the 5, 15, and the daily chart if I'm looking at swinging a particular option. And I'll see how those candles are closing relative to certain EMAs, right? And if they are still in the same trend that I've seen before, I'll stay. If they are reversing, meaning that I'm in puts and the trend's getting more bullish, guess what? I'll exit, right? But until then, I don't feel the need. Like, if you guys are on the Discord, and hopefully you are, you'll know in my channel, I've written all these things down even before we got in the challenge of what my strategy was. and I've stuck to it. I have not felt the need to stray away from that. And so my you could say that my small account is in protective mode more so than growth mode because of what the market is. Now, depending on how today closes, what the QQQ, what the SPY looks like, I won't know what I'm going to do for next week. I don't know if I'm buying puts. I don't know if I'm buying calls. I won't know that until next Monday. Trying to guess today is extremely dangerous for your small account. You can legitimately blow it up because something could happen over the weekend that you have no control over, and they could open up exactly the opposite of what you thought they were going to do for the week. So no, I'm not buying. It's very unlikely that I'll buy anything today. Um, if I do, as I mentioned in Discord before, I am slightly risky. So if I bought anything today, it would legit be a scalp, meaning I would buy and sell the same day. But it just depends on what the market does. You had any thoughts, Matt? There.
Sweet. I completely agree with you because I take the counterpoint and I am too risky in my small account. So I'm going to tell everybody what I did and my mistakes. So first off, I tend to average down too soon, meaning I will buy one, it drops $5. I buy a second, it drops $5. I buy a third, drops $10. I buy a fourth and a fifth. Now it's worked out for me, and it worked out for me yesterday. And I took my account from 1,300. I gave away at open, so I was under $1,000 because I scare sold, whereas I could have made $60 per contract. I took the loss because I'm a sucker when it came to my small account, and I didn't want to jeopardize it. So the whole thought was like, I don't want to blow up my account. I don't want to blow up my account. People are following this. I don't want to blow up my account. And I took the loss to start the day. So I was at 1,000 rather than being at 1,300 if I just waited about 10 minutes. Then I called the market, it was going up and then it was going to drop. So I'll just bring this up right here. 377 dropped SPY to 374, went to 373, back to 374. And I said to myself, there's going to be a 7-point range. So will it likely drop to 371 or go up to 378? So I said, it's going to drop. So as I said it was going to drop and I was calling the market on fire, I was like, all right, I bought another contract, another 2 contracts. Now, from having one contract and saying I'm done for the day, calling myself a winner, and I would have closed out the day probably a little under 1,300 because I was in the wrong position. I had 7 contracts going about 2:30 p.m. when I realized I was going to be incorrect. So I could have sold those 7 contracts for about $400, and I said to myself, what's the worst that can happen? Don't use a day trade up. You're going to be right. The market's going to come down. It's a little too frothy. All the institutions are telling us a SPY 350. So what did I do? I held on, and that position lost literally 50% of its value. And I probably lost about $200 like that, holding on, not using a day trade. So when you realize you're going to be wrong, as Love mentioned, and it's don't just like it doesn't happen at 9:34 in the morning. It happens once you digest the full market. So at 2 p.m., I realized I was going to be wrong, and I did the wrong thing for a small account, and I decided to hold rather than use a day trade. So I'm looking to exit out of my small account this morning that was at $1,300 safely, somewhere between $800 and $900, $800 and $900. And I'm doing that to be safe because if I don't exit out, it could go to 0. And if it went to 0, that's not the way to grow a small account. It could also have exploded and gone to like 2,000. But again, it's risky. Right? So when Love mentions July 15th, and I say always how smart she is and always how correct she is, and she knows how to average down. Everybody, please understand. She went out to July 15th. She's holding one contract. It's going against her.
Not anymore. No more.
Yeah, it's going against you for 2 days, 2.5 days, maybe 2 days, right? It's going against you. And you still, even when you think you see a spike and a peak, you still haven't touched it because the markets haven't told us they're going to reverse yet.
Yeah. So even when I bought the contract, I think I mentioned that I was holding it, and there was a reason for that. I didn't say that I would buy more because it's risky. If I'm wrong, I'll only risk the amount of the contract. I won't risk putting more money in it. But if I'm right, I want to give it time, right? I do have time to do that. So that's how I avoid over leveraging myself on a small account. It's very likely that I will never buy more than one contract if it's over a certain amount. Like if I'm buying a $15 contract, maybe I want 3 of those contracts and I buy one at a time. I don't consider that averaging down, only because it's the whole position I want is 3. I just buy them at different times, right? Almost dollar cost averaging a little. I know someone asked in the chat about the candles and the EMAs, right? So I'm not an expert on any of that. However, it does depend, Chris. It absolutely depends on what position you're talking about. Let's say you were talking about a put position, like you think the market's going down, right? So if you are a day trader or a scalper, you use the smaller time frames. You would use the 1, the 3, the 5-minute time frames, and you're going to be looking for the candles to close near VWAP, right? And a whole nother lesson. But if the EMA 9 starts to go above all the other EMAs, it's in a bullish trend. I'm generalizing, right? So that means your puts are in a bad position, right? If your candles are closing close to or above, and the 9 is trending above, like the 20, the 48, etc. Flip side, if you're in calls, that's a good thing, right? It's showing you a bullish trend. So there's more information here than what I'm just saying. Like this is like the highly condensed, shortened, missing pieces information. But to answer your question, it's kind of a loaded question, right? There's a lot of explanation and answer to it. So smaller time frames, if you're scalping, like if you're day trading, you really don't need the 1 minute. Like you don't need that. You're going to get faked out. You're going to get wicked out. Stay away. If you're day trading, the 3, the 5, and the 15, right? If you're swinging, you're going to be looking at those, but you're paying more attention to the larger time frame. I said the 15, but it could be the half hour, the hour, the daily, the 4 hour, whatever. But how the candles close, right, relative to what position you have, whether it's a put or a call, right? If those EMAs start to change and go into a bullish trend, like the 9 crosses over the 20 to the upside, that's a bullish trend. If it's going towards if the 9 is coming down underneath the 20, the 48, the 200, it's a bearish trend. Again, I'm not an AMA expert. Some very smart people have been trying to tutor me on this thing. So obviously do your own research, but you definitely, it does matter what type of position you have, what you're trying to do with it. And I use it honestly because it helps me understand it when the trends change, right? I spoke before about I'm not changing or selling my put even when the market's bullish, because I don't have confirmation that the trend is necessarily changed yet. When I do, right, when I look at those charts and those EMAs and I look at the algo flows, right, it's still showing me that right now is bullish. Yesterday's market net flow was super bullish, right, which told me, hey, be careful, don't jump into puts right now. But for some of the ETFs, the larger trend over the 5-day trend is still bearish, right? And so until that switches, I'm okay holding, right? Yeah, you definitely don't want to use the 1. Even scalpers don't use the 1 other than to look at it because they're curious, like I just want to see. But
yeah, you just want to see if it's going to flip in your direction or not. So that's why you look at the 1. But yes, I agree with Love.
The 1 will fake you out because the 1 minute's up, it's down. So even if you're looking for a flip, use the 3-minute or the 5. Like definitely the 3-minute, but the 5-minute is better, even though.
Yep. All right, let me tell everybody what I'm looking to do for my small account today. So once I exit out of my position, I am probably going to go not as heavy as I once would have, but I'm going to look at the UVXY calls today. Here's the reasoning. And I drew a chart. Do I think if the market starts out bullish, it's going to end at its highest point today? So just psychology, even if we're green today and we start out strong like we have, do I think we're going to end at the highest level? And I've already told myself we're heading into the weekend. There's been 5 out of 6 strong inflow days. I don't necessarily agree with the market. The institutions are telling us SPY is going down to 350. They're buying SPY puts that go out till August or September. So they're giving themselves a lot of time, but they're saying the market is going to go down and earnings will not come to fruition, and earnings will have to be lower forecasted. So what am I going to do? I'm going to go into UVXY calls. We spoke about volatility. And then it's the crazy thing. Analysts tell you the SPY is going down, the market's going down, but then they upgrade Snowflake, which is a cloud computing company. It goes up 4% pre-market. I mentioned it yesterday. It went up 14%. They were buying calls that expired today. They could easily be out of them because they've already returned 300%.
So what does that mean for the market? Like you're saying you're going to buy UVXY calls. What kind of, like how far out would you go for that?
Okay, so yeah, I'm going to go out to July 15th because that's what everybody's doing. Go out a full, 3 weeks. I'm not even going to go out till next week, even though for those ETFs, I like to go in a little closer. But I'm going to pay up because I'm going to be safe. And the reason I mention this is we have a member on Discord who only buys shares, and he buys shares of UVXY when he thinks the market is overvalued. And he said he got involved a little too early yesterday. He doesn't know whether to take the L or average down. So I looked at the UVXY chart this morning, and I'm telling myself, there's no way the market continues what it's been doing this week, 4 straight days, for another 5 days. It would be impossible. The chart would just be straight up. So I say to myself, okay, when you're not going to jump into UVXY calls right away, look for the lowest point today. The market's usually strong in the morning, 9:30, 9:40, 10 o'clock. I might start a position at 10 o'clock. Again, I'm going out to July. So Love's IWM put out to July 15th. I'm not so worried about it. But I feel very confident about this position because the point is I'm looking at the UVXY and it tends to spike once a week, once every 6 trading days. So that's fine. I'm going out 20 trading days. It's going to spike. And when it spikes 20%, even if it drops 2% here, 3 here, 4 here, it's going to spike. The IVs are going to go up and I'm going to make a winning trade. And it might take a little longer for me.
So I'm curious because I absolutely thought this week going in that yesterday was going to be a red day. I did. But it turned out not to be. Today is starting off fairly strong.
Yeah.
So I'm wondering what you see. I'm curious about what you see about what's going on so far that makes you want to buy the UVX calls today and hold them over the weekend versus buying them on Monday.
100%. I can answer that. That's a good question. But what my pre-story before was, even if the market's green today, do I think we're going to be the strongest as we head into the weekend, as we close out the day? Similar to yesterday when it just spiked from 2 o'clock to 4 o'clock. Do I think that's a possibility? And I really don't. So whereas I'm not having FOMO to get in at 9:30 or 9:40 or 10 o'clock or 11 o'clock, I know I want to position myself whenever I see that massive drop. When the UVXY surprises everybody, it looks like it's going up in the morning, and then all of a sudden the markets are strong and there's a massive drop of 50 cents. That's when I want to get in because people tend to overreact and oversell. So again, my position like yours will go out 3 weeks. So I'm just looking to call the best first position entry for me on the day. And just to let everybody know what I'm thinking about as far as entering, I will probably enter with a third of my small account money. So if I exit out this morning and I have $899, my first position is probably going to be a $300 position, which I know is counter to some people. They're like, buy one contract, buy another contract, and they're 100% right. I used to go jump 2 feet first, which is how I understand not to do that. But I definitely want to get settled. Why? Because if I'm correct for, let's say the market throws up today for some reason, and I can gain 100% and make $300, I would close it out. That's the whole thing. Just because it expires July 15th and your contract too, if the market was to tank one day and you thought maybe the next day,
waiting for, right?
Yeah,
that's exactly what I'm
saying. You would take profit, right? You wouldn't wait for it to tank and go, I think it'll be lower tomorrow.
No hopium, right? This is all strategy. Everything's planned before because you never, ever, ever feel obligated to hold a contract to expiry, ever. I don't care what expiry you have.
So I have a question for you.
Sure.
So you mentioned that you're a little more risky on your larger account. So when we just spoke, say the market drops and you're in puts or a negative position, a bearish position in the market. Small account, you have one contract. Larger account, you have multiple contracts, let's say. It drops. I know you're securing profit for the small account. What do you do for your larger account?
For my larger account, if I am on the correct end, I tend, honestly, to be honest, I tend to take profit. like if I'm like, hey, this is a great drop, I'm taking it.
Mhm.
What I've been trying to do more of is if I don't leave a runner, like let's say I have 3 contracts and the market dies, I have puts. I take all 3. Like
Okay.
I'm looking, and then I will probably roll one of those into a smaller or a cheaper strike
Mhm.
further out. So I'll still have something in it, but I've taken the majority of my profit. One of the things that I wanted to
Can
mention.
you just explain that? When you say roll out, can you just explain what that means to
Sure,
people?
sure. So for the people on the Discord, I've explained it in my channel, so it's written there for you.
Yeah.
But for those of you guys who aren't there yet, what that means is that let's say I have a 300. What is the SPY right now? Let's say I have a $375 SPY put, and the SPY drops to 370.
Right, you had 3 of them. You had 3 of them. So the SPY drops to 370. You have 3 contracts. You sold all 3 at 370.
Well, yes.
Okay.
So let's say that I have puts on the SPY for 375, right? And it's at 380 now, right? And it dies to 370, right? I would sell all 3 of those contracts. And what I would do is if I felt any sort of FOMO breeding up in my brain, if I'm not, I'm like, I still want to be in, I still think it can go to 368 or something like that, then I would take whatever strike that I had, like let's say it's 715. And instead of buying another 375 contract, I would buy 370 or a 368 or something like that. Why? Because it's cheaper than what I just sold for my 375s for, right? So I keep the majority of my profit, but I still have one in the as a runner, right? And so that's all it means to roll it. It's just basically taking the same contract that you had, selling it, but then buying a different strike, right? If it was calls, it would go up to the other side, right? But I mentioned the SPY only because Matt had mentioned that if you were paying attention to the puts, like the put sweeps or golden sweeps, there were some that came in for August and September puts for the SPY, right? And if you're in our Discord, you'll see that, right? And sometimes it's hard to understand how to process that information. Eventually, I will help write up something that I can post on that particular channel to help you guys. I haven't been feeling well lately, so it's coming. I just haven't done it yet. But you want to consider the fact that they could be hedging, right? If you notice with the SPY, what's happening lately is they're buying puts for August, but they're buying calls for January, right? And so you can't just look at them in isolation. You look at them in totality. Why would they be doing that? Or vice versa. I can't remember exactly. I think they may be buying calls then put. Anyway, they're hedging, but we don't know what they're hedging for. And also, if you look at the dark pool prints for the SPY, there's been huge dark pool prints coming in, both in market and after market for the SPY. The algos are showing, at least from what I'm seeing lately, is that the QQQ and the IWM have greater weakness in terms of put buying ability than the SPY does. So as a small account choice, I want to put my money where it would make the most. So even if I did see any further weakness in the market, like today or next week, I would be buying puts on IWM or QQQ. If I see strength, I'm going to switch to calls, but not for the ETFs. I'd actually switch to calls for some of the more popular, more volume, like stocks like Amazon or Nvidia or something, or AMD. Just a FYI into my thinking. If the market's strong, I'm going to tend to want to buy call options in like fast moving stocks. If the market is weak, I tend to want to buy puts in some of the weaker ETFs or the ones I see the most strength in. So I don't necessarily play the same one both ways, but people do, and they have really good success. Like Sarah on our Discord was talking about focusing on a few stocks, which I've spoken about before. Like I'm only going to trade like 1 or 3 different tickers. Like that's it. I'm not going to, and
Everybody should narrow their watch list down.
right,
Whoever you are, however big your watch list is, narrow it down.
Trading Champs came on and said that he focused on one, right? And that's true. Like I have several different kinds of watch lists, but then I have ones that I say current, as in I'm going to buy this week if I get a chance. And if I buy up to 1 to 3 of them, that's it. I'm not buying anything else. I don't care how good the setup looks because you can't focus, right? And so some people do play the same ticker back and forth. And guess what? They know that ticker back and forth now. So it's not just because I trade this way. You can absolutely own a stock, know it like family, and that's how you win at. But the stocks that beat you or the tickers that beat you, put them on the do not play list, right? Because they are going to keep beating you because you have not figured out that stock psychology, how it trades, and that's okay, right? Roblox, Jumia, those things, Ford are ones that will always stay on my do not play list because they beat me every time.
I have some stocks like that.
Every time.
Bitcoin related stocks have got me. Just to answer the gentleman's question before, have you ever played both sides? If you think the market is going to do this for the day, yes, you can play both sides. If we have a day like yesterday where it just keeps getting higher and higher, then no, you can't play both sides because one side will kill it, the other side will drop. You'll probably be losing IV. So if you're seeing volatility, you're in both sides, but you want to exit here. You want to buy here, sell. It's like you can only play both sides. You can't just play both sides if you're right in the middle and you go, okay, I'm right in the middle. I'm going to buy puts and calls right now.
You'll eat your premium.
Yeah, you'll kill yourself. And just real quick, I mentioned the UVXY before. I'm looking to enter my first position around $13.89, which is a whole 90 cents down where it is right now. I mean, pre-market it's down 38 cents. So I'm looking for another 52-cent drop, which means if it doesn't drop to that level, I probably won't enter. So when I tell everybody, small account, large account, have a plan. Just because an option price is like $2, you're not saying, okay, 10% off, $1.80 is good. Have an actual price target for the stock or ETF to go down to. And then you say, if the ETF goes down, in my case, I'm saying $13.89. If the ETF goes down $13.89, then the cost of my option should go down 54 cents, let's say.
Oh, no, I'm not shaking. I'm reading a comment about the guy with Apple. So here, that comment. So here's my thing. Right now, the pre-market is strong. Futures overnight, they got really strong. I would be cautious about, I mean, Matt has a plan, but for me personally, all the market's telling me right now is strength. So I'm not going to hope it into falling. I just have to see what it does. So
yeah,
right now,
it's tough.
So,
I mean, the reason Apple, I think Apple's tough. So I look at the piece of shit tech stocks that are out there. And when I say piece of shit, I mean no earnings. You're looking at Hood, Jumia, Plantier, SoFi, Open Door, right? They all have no earnings. They've all been crushed. And if you look at all those stocks for the past 4 or 5 days, all you see is uptick. And when you look at a good stock, or what people like to call a good stock, like a NEO, I've mentioned there's some demand every day. You wake up, something like that. So it's really tough to be in Apple puts, especially at 135. I'm pretty sure Apple is probably pre-market at like what, 138, something to that extent.
I'm not sure, but you know what, Steve, to be honest, I said this the other day to someone, with Apple, if you notice the option sweeps that come in, it's always for that 135 strike. Even if it's calls, if it's puts, it doesn't matter. It's always that same strike. And so I said to myself, I was like, when I get back in Apple, I will buy that strike because it's always that one. I personally, again, until the market shows me otherwise, I think it's going to be strong today. I'm hoping I'm in my head. I want my IWM put to be more profitable. So I want it to go down. But right now it's only giving me strength. Until it does show me something else. That's all I can think.
Now I'm going to comment to Steve's put because we're going to look at the price right now, and it's at 22 cents. That's what it closed at, and Apple's probably up pre-market. So I understand he could be in for as much as like 90 cents. It could be worth 22 cents at close. So he's thinking, how do I get the most money out? Because we're all in a similar position at some point or another. I'm in some puts that expire today that I'm saying to myself, how do I get the most money? Similar to Steve. Mine closed at 28 cents. I'm thinking they're going to open up around 14 cents. So I'm going to be down 50%. So Steve's contracts are $22 each. They're probably going to open up at $12. So then Steve has to ask himself, all right, I'm going to lose $12 per contract. What is my stop loss? Is it 5? Would I be happy with $5, which is, 25% of what they're worth at close? But here's the catch. If the market decides to throw up today, let's just say it does, right? It catches up with itself. When it throws up on itself, it's going to give back the 3 previous days' gains. So I'm not saying when it's going to happen,
right?
But when it does turn bearish for that one day and they decide to sell off, it's going to tank like 10 points on the SPY, like 2.5%, 3%, something like that. I just can't promise it's going to be today. So that's what you're hoping for, Steve. You've got $13 per contract at open, and you've got to say to yourself, if it throws up, it'll be worth $2 versus 0, which is likely at 10:30 a.m. or 10. Yeah, I mean, people are going to pay very little. If Apple is strong and it's 139 at 10:30, the 135 puts are going to look helpless.
Here's what you definitely don't want. At this point, they expire today. Why would you, like, you must be a gambler if you want to put more money into it today. Like, if you might be right, but you need more time, don't put more money into that. Either you sell them for what you can get.
Right now they're opening at 4 to 5 cents.
That's what I mean. So
either they're selling them. They're selling them, so which means the market is probably going to be strong. At least that's what it's showing right now.
Right. Okay. So Steve, this is what I'm saying I would do in this situation. You can keep these if you want or get what you can out of them, but don't put any more money in that. They expire today. Give yourself at least till next Friday at minimum. Don't put more money into. I don't care if you're just trying to buy yourself out of this position. You're like, well, they're only 4. Let me average down way much, and then later on today I'll get it for 6 cents. You could do that, but what if you would have, at the moment that they're really cheap, bought a contract for next week? You still would have made money off of that. There's no reason to put it into today's because you're risking way too much. The risk reward is just not there at this point. So like I said, I think the market is going to be strong until it gives me a reason not to be. And
I've got a lot of hope in my cheap ass contracts because I have contracts that are worth $5 each right now, and I have about 7 of them. So I'm not selling for that $35. I'm going to look for the market to drop, and that's hopefulness because based it on technicals, the market is showing you strength. But again, I'm a rational person and I understand what's going on in the market, where oil is, where the 10-year is, where the US dollar is. And I say, if they want to keep buying the market, whoever they are going to get surprised. If it's not today and it's not next Wednesday, it might be a Wednesday. It might be July 7th. It might be July.
I have a July 15th put, right? There's no reason to fight against the market right now. I'm not going to buy puts that expire, like, because they can continue to do this for the next couple of days. I don't want to be too early. I'd rather be right than early. So
hey, everybody, give a thumbs up if you want Love to take over the live stream and you don't want to see me anymore. Thumbs up for that. Make a comment. Love is the best. Thank you, everybody. Have a successful day of trading, and we'll see you on the Discord platform, 349 family. Got to talk about that one tomorrow.